The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and we got markets barely in the positive. We make a low overnight, 39.95.50. In the futures, we charge higher from about 6:30 in the morning. You catch a bid to the tune of about 25 points to the upside. We were lower. We're now higher. We'll see where we go on the opening bell. Yesterday, quite a day. Biggest down day so far this year for the markets, and there's an acceleration, and boy, you back it up to where we were just on Thursday, folks. You were pushing a high of 41.68, let alone the spike high we had Valentine's Day, 41.86. Just like that, you give up 180 points, right? 180 points. What is that? That's more than 4% that we just pulled back, folks, in the span of, 8 days, and you're talking about basically in the span of 5 trading days, 4.5%. Watch out for this market, man. NASDAQ 100, we're up by 37. Quite the pullback in similar fashion as the S&Ps. And taking a look at where we are in terms of the NASDAQ 100. No, that's not the one I wanted. It is interesting, though. Some of these Fibonacci's, I had this up here. Where did we go? What did we do? Check it out, right? December 13th, you trade lower, and we get to the, what kind of a retracement? 1.618. 1.618. That's where that market topped out, right? Pretty interesting in terms of that acceleration you got from December, down from a price point of about 12,000. You make lows coming into the new year basically at around, 11,000, 10,800. From there, you accelerate to 12,814. That was a 1.618 expansion from the pullback it had on December 14th. Now, pairing that one off there and looking at just what kind of a pullback we're talking about in the NASDAQ 100 since we've accelerated higher, the 382, just about 12,000. So that'd be a nice round number. The NASDAQ 100, we're at about 12,133. On the S&Ps, taking off that Fibonacci number, checking out the pullback we've had so far, I think you're a little bit lower. Yeah, look at that, man. Right? Interesting. When you take a look at where we are in the S&Ps versus where we are in the NASDAQ, dramatic pullback in the S&Ps versus the NASDAQ, not even at the 382 yet, right? Versus the S&Ps almost pulling back to a 50% of the run it had that began basically at the beginning of the year. All right, Dow Jones right now, up by 58 points, 33,218. We got the Russell, up by 4. We got commodities, crude. What's crude doing, man? 75.91, you're off of $80. Looks like the lower boundary line is about $72.50, $73, where this thing's been bouncing off. Made it to a low of $70.08. We're backing off again today in the price of crude. Gold contract up by $3. You take a look at the Fibonacci on gold. It's basing around this 382. We'll see if it holds. This area also correlating to a little bit of an area of resistance back there in the end of December, maybe turning into a potential area of support. But you know what, folks? The gold contract is going to react to currencies. The currencies are reacting to yields. Yields are reacting to currencies. They're all interrelated right now. And gold driving with those currencies, of course. We jump to yields. You're talking about the 10-year. A little bit of a reprieve from the action we got yesterday. But, boy, you talk about a sell-off yesterday, man. Back it up to last Friday. We were at 112. We just got a 110 handle yesterday, folks. We went from a 112 handle on Friday. Didn't even have a trading day on Monday, technically. You see the low volatility day as the markets were closed, even though you had futures trading, and you give up a whole point on the 10-year, and that correlates to, what are we at right now? Pulling it up. You're talking about a yield on the 10-year. Did we get there? 3.93%. We might have got there. Not quite, right? Probably just near 4% when we were down at that 110.30 with a 110 handle. You jump to the 30-year. Positive by 10 ticks, but boy, you talk about a sell-off from where we were on Friday, 125.30 to 123.30. 2 full points on the 30-year. VIX finally catching some life. We're backing off a bit. 23.63, the high in the VIX overnight. You check this thing out now. Boy, things look like they're getting on hand in the markets, right? You got negative prices. You got the S&Ps down 2%, NASDAQ 100 down more than 2%. The only thing I'll say, folks, is if you think that this is how things get out of hand, take a look at the spikes in the VIX. I'm just going to go back. This is just going back 365 days. Let's back it up a little bit more and encompass just the whole last year, okay? Boy, if this is a spike in the VIX happening, we got a long way to go until we've been spiking out usually. 35, 35, 36, 37. What was the spike last January? 38.94. We saw a spike in December to 26. That's where you had a little bit of a market sell-off. That's kind of the area that I was correlating those retracements from, that low that we had early December, right? Well, we're not even back up to where we were, folks, on January 3rd on the VIX. To put things in context in terms of fear in this market, elevated off of 18, we're sitting at 23. Markets look dire, but everything is in context here. Compare where we are in the VIX and compare where we are in the markets, folks. You know what I did the other day? I'm going to put this on a weekly. I'm going to put it on a 5-year weekly. This is the S&Ps we're looking at, okay? I mean, 3,200 is possible, folks. Doesn't mean it's likely. I think it's very possible. The next 6 to 12 months are going to be pretty rocky as we come into potentially margin squeezes, inflation raging, and the Fed staying the course, man, especially when we have an economy that's adding 500,000 jobs, inflation's raging. That's just a 618, excuse me. That's just a 618 of the move we did during the pandemic. NASDAQ 100 already did that, okay? You take a look at the NASDAQ 100, you take the bottom of the COVID levels, you look to where we are. NASDAQ 100 already pulled back to the 618. It'd be pretty interesting, right? If the NASDAQ 100 led to the 618, some of those tech companies resurge as maybe rates stop getting raised in the next 3 meetings or something like that. And what happens? The S&P takes a hit, though, because earnings. There's a lot that could happen. Nonetheless, NASDAQ already got down to the 618. You're off that level. S&P's only made it to the 50%, okay? But just for some context here, folks, I'm going to take this off, okay? And I'm going to zoom in from a chart of basically from December of 2018, okay, to where we are right now. This is only going back about 4 years, 4 years and change, right? Does this look like a tough market? Doesn't look like a tough market to me, man. This looks like a phenomenal market where we started at about 2,750, 2,500 realistically, and you're up 1,500 points from where you started at the beginning of 2019. So over 4 years, you've added, what is 1,500 divided by 2,500, right? 15 divided by 25, you're up 60%. Now, that's cherry picking the low, okay? I get it. That's cherry picking the low. Well, let's go back. Let's take where we were before the market had a little bit of a taper tantrum, okay, in September of 2018. What are we talking about now? We're talking about 4.5 years. Now I'm cherry picking the high, okay? Now I'm cherry picking the high from October of 2018. You just run up from 2,500 up to a price point of almost 3,000, okay? You cherry pick the high and you're up 33% during a period of 4.5 years. Slightly under, probably slightly under the long-term performance of the market, which is what, 9-10%, something like that. Probably debatable where you are, but something like that. So what, over 4.5 years, you do 33%. What is that? 7 to 8% during a pandemic and during generational inflation. Just putting things in context, folks, and that's cherry picking the high, okay? That's cherry picking the high from October of 2018. Now, where did I just cherry pick that high from? Right here. What about when you just ran from 600 to 3,000? It's important context in this market in terms of where we can go. Stay tuned, folks. We're coming back talking to our man Kevin Hincks from TD Ameritrade Network. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P futures up by 5 points right now, trading at about 4,010. We got actions in both ways in this market right now in terms of just trading to about 25 points higher from that low of 39.95. All the markets in the green after a tough day yesterday. Let's jump over to our man, Kevin Hincks. Every trading day, folks, right here on Tiger TV, the TD Ameritrade Network with the host with Fast Market, your host, Kevin Hincks, Tom White, the whole team. They have great guests on there. Saw man Randy Frederick on there talking about, I believe it was yesterday, some outstanding trades. Check it out, folks. We got volatility in this market. Great time as we still have earnings going on as well. Kevin Hincks, what'd you think of the action day we had yesterday, man?
Good morning, Tommy. You know, after a rough last week and a long weekend, not really surprising that we were weak yesterday. Now what, Tommy, is the real question. 4,000 on the S&P, 12,000 on the NASDAQ. Those are the numbers you got to be really watching for here, Tommy. You'll get some Fed minutes today that'll be pretty important in terms of them talking about 50 basis points at the last meeting, or is that something that came up since then? Besides that, you know, this is a market right now, Tommy, that's on its heels, and they need something to change the narrative. A slight green open here doesn't really excite me too much if I was bullish this market. So I would expect, these markets to trade in a pretty choppy range here, and I wouldn't trust an up market for very long this morning, Tommy.
I mean, the moves, it's almost like we've gotten used to them, Kevin, just because they're so mammoth even. I have, on a 15-minute basis on the Thinkorswim platform, it goes back 5 days on my chart. I have 41.86 on there, and I have 39.95, 190 S&P points, man. Pretty remarkable, the moves we're getting. Finally, a little life in the VIX, up to about 23. I wanted to jump to Walmart real quick, Kevin. What'd you think of the action on Walmart? We talked a little bit about it yesterday. You had Walmart and Home Depot both trading lower pre-market. I thought it was really interesting, especially as the market deteriorated all day, that you actually had Walmart trade higher on the open, hold on to those price levels, and finish in the green yesterday. What did you think of that action?
Yeah, I think the numbers in Walmart were massive, but I think what turned that stock around from pre-open to opening and trading higher on the day was inventories, and the fact that they seem to now have their inventories under control. And that allows them, in my opinion, it allows them to get their defense off the field and put their offense back on the field. So I think their inventories and what James Bullard talked about, people trading down to Walmart is actually part of the deflationary process, Tommy. So I think Walmart's a really interesting story going forward about, groceries and pricing and where people are drifting in terms of their choices. But I think the biggest news for them yesterday is some positive comments on their inventories. Remember, that hurt Walmart, that hurt Target, that hurt a lot of retailers that missed on the discretionary versus staple inventory problem. And now that seems to be working through. So that should excite people in Walmart. It should excite people in Target as well.
Yeah, it's pretty remarkable sometimes. I mean, the management, the C-suite of some of these companies, because it was remarkable, those inventory numbers and just how you can clear through some of that inventory as you push forward. And I think all of our spending habits, man, whether you're going to Walmart, it is interesting how we all become more conscious of everything, man, no matter where you are, I think, on that income scale, because the percentages we're dealing with are just mammoth, man. So I think I find, myself everywhere, every purchase, I'm just hyper aware of price sensitivity right now, whether it's shopping at Amazon, Target, Walmart, right? Even Sam's membership, which is Walmart, kind of comparing all that in my head because the numbers are rising so much. With that in mind, Kevin, you mentioned Fed minutes. Are you looking for anything substantial? I mean, I know the conversation, we have Bullard out there being pretty hawkish. He's been pretty hawkish, though. 50 is now in the conversation. Opinion-based, I know we don't know what happens until 2 o'clock Eastern time, but you looking for any surprises from the market from that standpoint?
We'll see what jumps up. But like I said, if I'm looking at this market today from a realistic perspective, I don't expect an up market to hold very long. That doesn't mean it won't finish higher, but I'm going to look for some real two-way trade here, Tommy, today. Nice. And an up market doesn't really excite me that much because it's not up very much and there's no news to change the cycle. So I'm looking for news flow to change the cycle. Maybe the Fed minutes does that. Probably not, though.
Yeah, we've had some mammoth moves in both directions, even intraday across the board. Couple of, last few days it's been downside, but I'm sure there'll be bounces even if we're getting a second acceleration here. With that in mind, Kevin, we still got companies coming out with their numbers. Do you guys have what you'll be talking about on the program coming up today at 12?
Like Folio will do a presentation on Etsy. Obviously, the high-profile name today is NVIDIA, coming out with earnings after the bell. And then we'll see. It's either going to be a Teladoc or a Moderna or even maybe a Domino's Pizza. How do we don't know about the last name yet, but definitely Etsy and NVIDIA to start the show.
Nice. And all those companies you mentioned, I believe they have their numbers coming out as well. Is it tomorrow or this week?
Yeah.
Is that correct? Nice.
Yeah.
It's remarkable how many companies, man, especially retail across the board, Walmart, et cetera, just coming out with the numbers as your earnings season continues. Kevin, we appreciate the time on a busy morning as always, man. We look forward to talking to you tomorrow morning, and we'll be watching at 12 o'clock today, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, tune in. You heard it. They'll be talking a little bit of Etsy. And, yeah, they may talk some Teladoc. Interesting stocks, right? Teladoc, Moderna, their numbers out this week as well. And as Kevin said, NVIDIA. You jump over to the Analyze tab on the Thinkorswim platform. NVIDIA, $206.55 as of the close yesterday. You're trading at about 208 right now, so you're positive by a couple dollars, almost a full percent right now to the upside for NVIDIA. And what are they pricing in, folks? You got to love the Thinkorswim platform. They are a sponsor. I know I'm biased, and I'm going to say it anyway, and it comes with the bias, but I tell you anyway, folks, the Thinkorswim platform, it's the most outstanding trading platform, especially if you're an active trader and especially if you trade options in any way, and even if you don't trade options. That's why I say you should check out the program with Kevin, Tom White, the whole team. They have an outstanding lineup of guests on there. I mentioned Randy Frederick. If you're not familiar, folks, Randy Frederick, head of derivatives for Schwab, okay? He used to do a program here at TFNN on options. Outstanding mind. They talk about options, but if you understand options, it allows you to understand what's priced into equities, even if you're trading those equities, which is why you should try and understand it anyway, even if you don't want to have that type of exposure. And options, our man Dave White says it all the time, it's supposed to reduce risk. It's a great way to think about it. Now, you can take some leveraged positions in options as well, okay, but you can also use them to reduce risk. You can use them to absorb premium. You can use them even for underlying equities that you have as a way to potentially absorb premium, etc. So check out the program, NVIDIA, they're talking about a $13.36 move. And yeah, they're out with their numbers after the bell tonight. So you're talking about basically, what is that, 6-7% move priced in for their numbers. And if you want exposure basically through Friday, you're talking about a $15 move. So 7.5% priced into NVIDIA for their numbers. It's been quite a run off the lows, man. Basically double what this thing bottomed out at 108 to 206. I saw Intel, were they already out with their numbers a while back? But what are they doing? Quite a sell-off yesterday, and I had some headline, I believe, up there for, let's see. Do I have NVIDIA up there? Intel? There you go. Slashes their dividend and reaffirms first quarter forecast. So that was out this morning. Slashed the dividend payment to the lowest level in 16 years. I don't think, when are they out with their numbers? Yeah, they're already out with their numbers. So things being a little bit more dire, right? Yeah, they came out with their numbers in January. All right, we'll finish this up when we get back, folks. We'll take a look at Intel, NVIDIA. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, welcome back. We got markets clinging on to gains right now. We get the S&Ps up by 5 points. You see a little bit of a sell-off as we came in at 745 this morning. We were trading about 10 points higher in the S&P. We were trading below 4,000. Be interesting to see if we get some two-way action today, just above that 4,000 mark. And as our man Kevin Hincks said, we're sitting just above the 12,000 mark, 12,130. And that 12,000 mark also I was looking at, remember? That's your 382. Sorry, not that long. Of just the run up. Let me take this one off for some clarity. of the run that we had from January 6th, 12,000. All right, also a nice round number, and also the 382 of the run you had basically from January 6th. Now again, right, take a look at how strong the NASDAQ 100 has been compared to the S&P. NASDAQ 100 is not even at the 382 pullback of the entire run higher it had from 10,800 to 12,800, we'll call it, okay? You take a look at the S&Ps, you take that January 6th day, you put a Fibonacci number on this thing, okay? And we're at a 50% pullback. NASDAQ 100 is not even at 382. Now, the NASDAQ 100 is the one that first traded back to a 618 of its move from the entire COVID expansion, right? Like I just showed you, S&P's only made it to 50%. Well, what happens if we're seeing a little bit of a reversal here? Man, tech stocks, growth stocks, absolutely hammered when we got the Fed hiking like we never thought possible last year, right? The story's changed. The Fed is still looming, but their impact is also looming. And do you know what the impact could really hurt? The S&P 500 on a broad base. Earnings base, not as important as growth. It's going to punish growth stocks as well, so maybe that's not how it plays out, right? But it is interesting that just like that, you get a 50% pullback. Folks, we just gave up half the gain we've been talking about. Seems like for 6 weeks, everyone's saying, market's positive. There it goes, just like that. 50% of it gone in 3 days. So be careful on this one, as I think the sentiment that Kevin portrayed there, saying not too exciting being up 5 points right now after the decimation that you've seen the last couple days. All right, what else do we have going on? We're going to talk a little rates. Rising bond yields rattle 2023 stock rally. Yeah, they're all correlated, folks. We're going to be talking to our man Teddy Kegsdag coming up after the next break. We're going to be talking currencies. We're going to be talking yields, which drives markets right now. The yield on the benchmark 10-year Treasury note, back towards 4%. I think we're at about 3.93 when I kicked off the program. Finished yesterday at 3.95, well above the January low and higher than where it ended last year. Did you hear that? The 10-year yield is now about 1/10 of a point above where we ended last year. Take a look at it on the chart, man. There it is, right? You come into January, we're above that price level. We're above where you were in December. And we're inching towards 4%. And yeah, you better believe that that's going to matter as the market has adjusted its implied rate for the Fed. And it's all mattering, folks, to say the least. All right, what else do we have pulled up here? Let's take a look. I talked about, well, yeah, let's talk a little bit about Intel and NVIDIA. We didn't finish that up. So the company is going to reduce their quarterly payout to investors to 12.5 cents a share. That's payable June 1st. Intel's currently quarterly dividend is 36.5 cents and projected to cost more than $6 billion in 2023. The new payment resets Intel's dividend to a level not seen since 2007. I mean, watch out here, folks. Now, Intel, they're up 0.8%. All right, market probably was aware they needed that money, right? I'm sure that was maybe an inevitability as this thing's been in a one-way trip from $68 down to 24. You're pushing those lows yet again that we had. And yeah, I'd be real careful on this one, folks. Now you jump over to NVIDIA. NVIDIA with their numbers tonight. As you see, a little bit of a different chart. Quite a bounce off the bottom. We're up about 0.6% right now. You pull up the 15-minute, a little bit higher on the open with the market. NVIDIA, as I mentioned, about a $15 move priced in for their earnings for the week if you want exposure through Friday. So about a 7.5% move in either direction if you're talking about NVIDIA. All right, let's talk a little bit of weather. Winter storm brings heavy snow, ice from California to Maine, grounding more than 1,000 flights, thousands without power, flights canceled, and record snow expected in places. We're fortunate to live in Florida. We're not dealing with any of that right now. I almost can't even tell you how beautiful it is right now, folks, because I feel like I'd be bragging. But it's going to be like 87 degrees this week, and this is going to sound horrible, but I wish it wasn't so hot because this is kind of our winter, and we get 90 degrees 8 months a year. For 4 months a year, it's kind of nice if we can get some weather in maybe the 70s, maybe the low 80s, but we're going to be pushing 90 degrees this week, so pretty remarkable. More than 1,000 flights into and out of the U.S. were canceled by 9 o'clock. Southwest canceled 235. We'll see how they do this go around. Southwest, I'm sure they all hands on deck at Southwest to avoid another debacle. Delta, they canceled 197. SkyWest 216. Let's see, Denver and Minneapolis, the worst. Good old Denver, Colorado, and Minnesota, man. You get some big-time snow and cold out there, right? Southwest Wonder, more flight cancellations. So let's jump over to Southwest and see how they're doing, as this market's only up about 3 points right now. Southwest, well, you traded low with the market with everything yesterday. You're actually up by 0.2% today for Southwest shares. All right, folks, you can listen to our man Larry Pesavento every day at 1 o'clock with Trade What You See. And he is doing a live trading webinar, folks, 2 weeks from today, March 8th. Okay, it's a live trading webinar, Trade What You See, March 8th. He'll be in there with subscribers to this event for 5 hours. This event goes on from 9 a.m. until 5 p.m. Excuse me, let me do that again. 9 a.m. till 2 p.m., 5 hours, 9 a.m. till 2 p.m. Larry really doesn't trade the last couple hours of the day. That's why he closes it off about 2 o'clock as well. He looks for action in the beginning and the middle of the day. 5 hours, 9 till 2, Trade What You See. Now, this is $295. You gain a month of his daily newsletter, Fibonacci 24/7, which is a $97 value immediately, folks. So you're taking off almost $100 right away for the value of the newsletter, which Larry puts out all the time. Great newsletters out every single day. Sometimes he puts out an outstanding report over the weekend. I'm telling you, folks, that report he puts out over the weekend, you're talking about pages of writing, 20, 30 charts, probably 4 or 5 videos over the weekend for Fibonacci 24/7, along with videos, charts throughout the week, 24/7, as the name says. This will be archived if you can't attend all 5 hours. He'll be talking about how he trades the markets, ABCDs, okay, expansion, Fibonacci, risk reward. Please check it out on the front page of TFNN and sign up for the webinar. When you sign up, you immediately gain access to the newsletter. Okay, this will be archived, as I mentioned, and you get a month of the newsletter that goes with this event, and it's going to be 2 weeks from today. Larry usually does about 2 of these a year, usually, is kind of what he's pushing out right now. I'll have to pull up when the last one was. It might have been May last year. Is that right? I'm not certain of that. Maybe somebody in the den even probably can tell me when the last one was. But check it out. That'll be 2 weeks, and it'll take place in our Discord room. A great way to just kind of put on these events, which have gone fairly well in the past. So please check it out, and you can check out our man Larry Pesavento every trading day at 1 o'clock p.m. Eastern Time. And I believe he may be making a guest appearance with my dad this afternoon at about 3:40, if you want to check out that time as well. All right, what else do I got pulled up here? Let's take a look here. Coming into the break here, we talked about bonds. Yeah. AI changing everything, right? We'll mention this one when we come back, but guess what? We're coming back with our man Teddy Kegstad. We're going to be talking some Forex. We'll be talking some yields. We'll be talking some Tiger Forex reports. Stay tuned, folks. We'll be back with Teddy.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps right now up about 9 points. NASDAQ 100 up 52. Dow up 52 as well. And the Russell up by 14 right now. Let's jump over to our man, Teddy Kegstad. Folks, you can check out Teddy's work, the Tiger Forex Report. He puts out an outstanding letter every Monday morning with updates throughout the week. Right on the front page of TFNN, hit that newsletter tab. Check out the Tiger Forex Report. Comes with a 30-day money-back guarantee, folks. You can't go wrong. Teddy Kegstad, good morning.
Good morning, Tommy. How are you?
I'm doing well, man. How about yourself?
We got an ice storm brewing in Chicago, so I'm doing all right, just hunkering down today.
Boy, ice storm in Chicago. What does that mean for temperatures for you guys, man? Like single digits, teens, negatives?
Yeah, it's going to be, I think, it'll be a high of like 30 to 32, something right around the freezing later on today. Okay. But right now it's in the 20s. Yeah, it's going to be cold and brisk.
With that wind chill, I'm sure.
Yeah,
Chicago,
exactly.
Windy city. So, Teddy, where do we kick things off, man? We got some action, things kind of progressing somewhat the way we've been talking about, with yields maybe catching a little bit of a bid. We're seeing a reversal of some of the trends this year, but what do you think of the action we've got over the last few days with this market and yields and currencies accordingly?
Well, it was a holiday market week, so definitely the volatility yesterday was it was kind of nice to see that. You don't usually see that much action, especially with the way yields moved yesterday. And we took out a December low, so I think that you have to really pay attention to what's going on with the yield curve right now.
Yeah, what do you think of the fact of where the market is with still where the yields are in terms of getting to where we were in December versus the market still in an somewhat elevated basis, even where we were? Quite the run-up into January. We've had quite a pullback of 4 or 4.5% even in the S&Ps in a few days, but still elevated with yields kind of above where they are on that basis.
Mm-hmm. Well, right now we're definitely falling on good support for yields. If we get a bounce, I would say over the next couple of days, it wouldn't be shocking. But I would right now, considering we're coming off of a higher move high and we made a lower move low on a weekly basis with the bonds and the 10-year, I think you really have to look at best a neutral trade. So it's a sell rally forecast for that, meaning that I would be very cautious buying into thinking that you're going to have any type of lower yield trend going into the next few weeks or even the next couple of months. I think it's going to be the opposite, where we're going to be pushing yields higher for the next few months for sure.
Yeah, it looks like that's the case, right? Pretty interesting to see where we go 2 or 3 months down the line with the data that we've been getting. The dollar index, what do you think of the pop we've gotten there at a price point of about 104 in the dollar index off of the lows of about 100 and change, almost 101?
Well, I like the high that was set on Friday. I think short term that the dollar probably will hit support a little bit. I mean, today we have a kind of a mixed bag of goods. There's a lot of divergence going on in a lot of the currencies. And you also have, for instance, the U.S. dollar Swiss trade, which is becoming just a nightmare of a range trade, So the more of these currencies that are becoming range trade, markets right now, you're not going to have much of an impact by, say, the euro or the pound or other, currencies, as far as making the dollar index move. So the dollar index is becoming a very rough gauge. short term, I like the high from Friday. I'm not bearish the dollar, but I think right now it's a good chance to see a little bit of a correction in the dollar, especially when it comes to like the euro and the pound, moving forward. But with the Fed stance, obviously people are going to be waiting on the minutes, and I think that what we've been talking about for the past couple of months, which has been contrary to the main consensus, is that the Fed's going to kind of go in line with what we've been talking about, and that is that they're not going to be as aggressive as they have been, over the past year, and especially starting out last year. But the hawkishness isn't over. The data doesn't support anything for them to really pull back the reins, let alone this theory of possibly cutting rates at the end of the year.
Yeah, that one might finally be out of the bag. It depends how we get some data over the next month or two. I saw Bullard out there, again, I think this morning on CNBC, saying, why I just want to get there as fast as possible in terms of his terminal rate of 5.3. Whether we get there or not, the data is still going to persist, man. And we got, retail sales 3%, 500,000 plus jobs added, and we get that PCE on Friday. It'll be interesting to see. When you look at economic data, Teddy, I know there's so much of it, of course, across the globe, but where we are right now, inflation's so important. Something like the PCE, I know CPI is an important number. We've talked to our man Kevin Hincks many times, just on an equity perspective, right? The data that drives everything. Non-farm payrolls, of course, a mammoth one across the board. But is the PCE, when you're trading Forex, the dollar with yields are right now, is that something you're looking forward to on Fridays? Does that drive some of the action?
I think it has some bearing. I don't think it's as strong as when you look at the major numbers like CPI or unemployment or PPI. I do think it has an influence, but I kind of look at it like the Michigan sentiment, where if it comes out radically unexpected, that's where you might see a knee-jerk reaction from a number like that. But otherwise, it's not that it doesn't mean anything, but it's just a number that comes out that you use as kind of a supportive gauge, if you will, for any trend that's in place.
Is that Michigan number out Friday as well? I think it might be.
Michigan sentiment, yeah. Is it this week or next?
I think it may be, folks. I think it may. Yeah. I'm not certain. What about the yen, Teddy? Let's jump to the yen.
Sure. So let's look at the yen. Well, with the yen, let's see. We have... yesterday it was definitely getting nice and strong, trying to lift the bid. Today it's pulling back, and that's where we have this choppiness in the dollar. The yen is one of the currencies I think that you're going to see a trend still, but it's not going to be an aggressive trend just because we have the whole transfer of leadership with the BOJ coming up in the next couple of months. They haven't pulled the trigger yet, so that means that we don't know when it's going to happen. We just know that they're very likely to. So, but the market right now is saying, well, until they have this changeover in leadership, it's more bullish, the U.S. dollar yen right now, for any type of trend. You have to look at when we came off the highs from months ago. That's still a correction in the long term. Overall, the U.S. dollar yen has been in a very, very strong bull trend. So right now we're at that kind of like stage where we're trying to figure out is what we just recently had, was it a correction, or are we looking to have this, this next leg up where that becomes, it falls short of the highs, and then we start the bear market for the U.S. dollar yen, which is a very viable, chance if the new leadership becomes aggressive. Now I don't think that the BOJ is going to ever be as aggressive as we were, or the ECB or other central banks like that. But let's say they take off to just like the quarter point, half point kind of like leaning initially and stuff, and say that, let's say they say that they're going to be trying to fight inflation. That would mean you might see a quarter point raise, by the BOJ 3-4 times in the course of a year. That would be a big deal, and that would mean that the U.S. dollar yen trade would probably be not necessarily bearish, but I think that the bull rally may be actually kind of over, So I think we're setting a case for a very large range trade, but the high may be in. The only thing I could see that would change that kind of scenario is if our Fed got super aggressive, which then would outweigh anything the BOJ does, and then you might see new, multi-month highs. But it's very possible that the top is in. It's just a matter of now, are we going to correct and find that next best selling point for the super long-term trend, or are we, what I'm saying? Like, it's a matter of like, definitely. What are the central banks going to do? So we're kind of at that inflection point. But I'm bullish right now, the U.S. dollar yen.
Nice. Yeah, it's pretty interesting. I have the chart up here in terms of that entire run up from 115 to 150, and we back off to 130, and then you're at 135. And which way is the actual trend shaping up on this chart? Teddy, I appreciate the segment as always, the time, man. I appreciate the Tiger Forex report. Please, folks, check it out. You heard the reason why you should sign up, man. It's shaping so much of this action. We got another week, man. Always interesting to see what will be next Wednesday. Have a great one, Teddy. We'll talk to you on Wednesday,
you too.
Man.
Thanks, Tommy.
Thanks so much.
Higher yields.
Higher yields. Can't argue with that one right now, man. Thanks, Teddy. We'll be right back to finish up the program, folks.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all Tigers and Tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up by 8 points. NASDAQ 100 up by 43. You got the Dow up by 39. Russell up by 14. Natural gas catching a little bit of a bid, man. They were talking about this thing in the Tiger's Den. If you haven't joined the Tiger's Den, folks, please check it out. It's $1 for the year. We basically only charge as a way to validate everyone's identity so we don't have a million spammers in there. Natural gas. Just remarkable to see how this thing's going to trade out. They got so much natural gas, they got nowhere to put it. This thing's been on a one-way trip from $7 down to below $2. We're up barely this morning, but yeah, not really strength in that chart, to say the least. Gold contract up by about $3 right now, sitting at the 382, the run it started in October. And notes and bonds right now, a slight reprieve from the action we got yesterday. And look at this, man, right? You got the 10-year now up 10 ticks. So much for 4%. Just off that number right now, the 30-year up by 23 ticks right now, catching a little bit of a bounce. And boy, you talk about mean, if you're looking at channels, man, if you get a reversal, this could be the spot. That was the downtrend channel. You back it up to March of 2022. You have the 30-year at 160. You drive down to 117. Some nice parallel lines on the upper and lower boundary line. You break out of that channel line in January. And what do? We come back and we test it, and maybe that's the acceleration. Right? Keep that on your radar, man, as that's hitting a potentially important point. And I don't have the chart up there on the 10-year, but I'm pretty sure you have some similar action here in terms of just adding a drawing. Let's look at a trend line real quick on the top side. Yeah, not quite the same action there. You see when you line up the tops on the 10-year, you've actually come back into that, whereas on the 30-year, it lines up so perfectly that it's testing that line. All right, we got markets holding on to the gains right now, and I believe it was. So University of Michigan Consumer Sentiment Survey, that is Friday. What you're getting the final reading of the University of Michigan Consumer Sentiment. You get the initial reading on the second Friday of every month. This month, that was February 10th. This Friday is the fourth Friday where you get the final reading for last month, January. All right, folks, thanks so much for starting your trading day off with me. We got our man Basil Chapman coming up next. We got Steve Rhodes at 11. Fast Market at 12. You heard them. They'll talk a little Etsy. They'll talk a little bit of NVIDIA, maybe a couple other stocks in there as well. Don't miss Larry at 1 o'clock. Sign up for his webinar 2 weeks from today, folks. Dave White, Tom O'Brien this afternoon. Have a great